Class is in session. Check this out. Got us a new background here. If you're ready to save time, make money, and start winning with less risk, you've come to the right class. This is Outlier University. And our first student who made it in today is our friend Ozzy Ian. Where'd he go? Here he is. How you doing, Ozzy Ian? Oh, no. I think his internet's... He's got to go all the way to the Outback. Might just take a moment. I hear him. Okay, let's add in Deep Thought. Deep Thought, how are you, sir?
I'm down on the beach today.
Hell yeah, let's go.
Yeah, I'm good. Yourself, Chris?
Yes, sir. Yes, sir. Mikey Mike is here.
Hello. I made it.
We're taking roll call. That's basically what we're doing here. Joe, are you here?
Chris, I'm here, and I'm green on a red day.
Very good. Very good. Salty Brad, are you here in class today?
I'm here.
Excellent. Paul, the man from the deep, are you here?
I'm here.
Excellent. My friend Dave out in Arizona, have you made it in today?
I am here. Good afternoon.
Good afternoon to you. And the man himself, JC, are you here?
Yes, sir. With my
swords
in the background,
here.
ready to go.
I hope you guys are all ready for Outlier University. Let's go.
Are you ready? Let's go!
Respect is earned. Respect is never given.
All right, gentlemen, how is everybody doing today? Let me ask you this. If we don't, just to make this easier on me, let's make sure all of your mics are muted. And if you want to say something, please feel free to raise your hand, and I will do my very best to point you out, and then we'll unmute you. That way we aren't talking all over each other. Does that sound good? If that sounds good, give me a thumbs up. Very cool. Ozzy Ian's still struggling in the Outback. We'll see if we can catch him later. That's all right. But let me ask you guys a question. This week has been the most incredible week possibly ever in the history of my portfolio. And I'm so stoked that all of you guys have been able to follow along. Tell me some of your experiences over the last week. Now, of course, I don't expect you to know everything coming from our first lesson of Outlier University, but what's something that you've picked up in the last week following along what I've been talking about? Please feel free to raise your hand. All right, Salty Brad.
Position sizing, making sure that when that train is leaving the station, you're on a position that if it comes back to you, it doesn't run you over and kill you. So that's what I've learned.
That's a great point because
being sure to have that the correct position on.
Yeah, and you want to be big enough where it makes a difference when you're right, but you want your stop to be tight enough where it's not going to make that big a difference if you're wrong. All right, somebody else. Let's go with Joe.
Yeah, I'll piggyback that one. But when your account moves as much as our accounts moved, you also have to remember to go change your position size based on the new value.
Man.
What I picked up was the benefits of rolling. When you first started talking about rolling, when I came on board with you in January, I had no clue what rolling was, and to see the benefit of that in action, that was fantastic.
Yeah, and using that analogy that I just stumbled across yesterday in the live stream, it's like buying speakers from Costco for $1,107, taking them home, enjoying them, taking them back to Costco and saying, you know what, I don't want these anymore. And they're like, okay, we'll give you $1,200 back. And you're like, wait a minute, you're going to give me more than what I paid for it? And then they make it even better. And they say, yeah, and keep it and then sell it back to us later. I
might have reused that one actually when I was explaining it to some friends. So it's a great analogy.
Yeah. And so I when I first learned that, I was like, whoa, that is a huge game changer. So I'm super stoked that y'all got to see that. Does anybody else want to share a story this week? All right, Paul.
I learned that I need to be in this university because I panicked on SMCI this morning. So
what made you panic?
I didn't trade my plan. I watched all the red in the account, and I was looking at Bookmap, which shows limit orders that are sitting there, and it kept busting down through all of them. So I panicked. And now it's moved back up almost even. So that was a tough lesson.
Well, it's a lesson that we all need to go through at some point. So don't feel too bad about it. But it could have continued on all day long, right? It could have just trended down all day with absolute destruction. And then again, if you follow that part of your plan, you'll know to get out when something happens, right? And for me, right, I position size in a way where if that happens, it sucks, but I'm going to live, I'm going to survive. And of course, nobody wants to lose a trade, but knowing where you're going to get out and also when, right? What time of day you're going to get out, right? Because, at 9:30 this morning, 10:30 this morning, it's going to look very different than at the end of the day, right? And so figuring out what time of day works best for you is really important, right? And it may actually be at 11 a.m. That may be the best time of day for you. And if it is, roll with that, right? Let your plan tell you what you're going to do, right? You can drive from Dallas to Disney World, right? You can do this the whole way. All right, very cool. Thank you guys for sharing your stories. Let's do this. Let's shift over to the slides and we'll go through today's lesson. Now, I do have some trades that I need to make, so we'll give us a 15-minute timer. After the 15 minutes are up, I'm going to jump over, handle those trades real quick, and then we'll come back to Outlier University. Okay, so for today's lesson in Outlier University, let me introduce myself real quick. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. So today's lesson is about platforms, brokers, and executing a trade. Now, I've been researching because I want to make this the absolute best possible for you. That telling stories actually helps reinforce the lessons. So I'll be sharing some stories. Now, I'd like to ask you guys to share some stories as well. But the first thing is, what is your brokerage account, right? This is an account that is the only way you're going to be let into the stock market, right? You can go to the bank, you can go to Kroger, you can go to Amazon, you can go all over the place. But none of them are going to sell you any stock. They don't have any stock to sell you. Only way you're going to be able to execute a trade, to buy it, to sell it, is to go through a broker, right? Now, you can use it on an app, on a website, whatever. You could go really old school and walk into an Edward Jones office. There's a Raymond James office not too far from where I live. And I mean, if you like getting robbed, that's where to go, because they're going to take, $50, $100, $150 just to place your trade. Yeah, ain't nobody got time for that. For sure not. But I'll tell you one thing. The way that we have it today, with the amount of brokers that are out there, with the ease of access to brokers, is a blessing and a curse. Now, I'll say it's a blessing and a curse because it's a blessing because we have access to markets almost instantly, right? We can execute orders so fast to be in a stock and be so fast out of a stock. Like our friend Dave, who day trades futures, he could be in and out within just a couple minutes. Now, that is a great thing that we have, but it also has drawbacks, right? If you guys remember, there was a young gentleman a few years ago who actually took his life because he was trading through Robinhood, and he didn't understand the trade that he had on, and he thought that he was going to be down $700,000. And because he didn't have enough information, he was just trading stimmy checks, right? Like we all were at that time. Because he didn't have enough information, he thought it was over. He thought his life was over, and he took his life. And it turns out that Monday morning, everything would have been fine. He would have had a losing trade, but he wouldn't have owed $700-something thousand. It may have been like $500 or whatever. And so I think that that's so critically important to think about is, yes, it is amazing that we have access to the financial markets. But also, because we have access to the financial markets, we need to make sure that we understand what we're doing. Right? We need to make sure that when we are buying and selling stocks, buying and selling options, doing all these complex financial moves that a lot of people have no idea what they're doing, we need to treat this with respect, right? Because this is your money. You saved for years and years and years, right? Every dollar that you put in this account probably has some value of time that you've added to this, right? Like if you're earning, $50 an hour, and you saved $50 and put it in your brokerage account, that's an hour of your life. So we need to make sure that we treat this with respect. So the brokerage account allows you to connect with the stock market. and you can put money in there, and sometimes they'll actually pay you just to hold cash, right? That's kind of cool, right? Now, how do you choose a broker? Right? There's all kinds of them. So there's Robinhood, there's Fidelity, TD Ameritrade, Tradier. Right? Here's a few things you got to keep in mind. One is fees. Years ago, I mentioned the story the other day. I had the conversation with Mark Minervini. He was saying how difficult it was to trade when he first got started. He was still making money, but it was so hard for him to trade because he had to go to the broker's office or call him up on the phone in order to make the trade. And then he had to deal with that guy's BS the entire time. He didn't want to deal with that. He just said, buy here, sell here. That's all I care about. Leave me alone. And of course, the broker, the actual man sitting in the chair, decided he needed to take a little cut, right? It was, maybe $100 each way, plus a snip on every single stock that you're selling, right? So if you're selling 1,000 shares, he's going to get 1,000x whatever his cut is. Ain't nobody got time for that. That super sucks. But we don't have that anymore, right? Like Robinhood, basically free. Tradier, basically free. All kinds of things are available to us now that make life so much easier, so much faster. But you need to figure out what works for you, right? You got to choose based on what fits your lifestyle. Some of them are more beginner friendly, like Robinhood. Some are more feature rich, like Thinkorswim. I actually don't use Thinkorswim because it's too much, right? I know a lot of our traders like Thinkorswim, but have you actually logged into Thinkorswim as like a person blind to the platform and logged in? I was like, what in the world? What are all these different areas? What are all these different buttons? I need an advanced degree like Dave in order to understand what I'm talking about there. So Dave is our resident Thinkorswim expert, and he writes us some pretty epic codes for Thinkorswim. So Dave, I really appreciate you doing that. But to that point, not all brokers are the same. So I want to ask in the chat here, if you don't mind sharing, what brokers are you using? What brokers have you used? Like for me, I've been through several. I remember the very first one that I picked was Options Express from E-Trade, which absolutely blew. I'm telling you, they didn't even have options chains. It was like drop down buttons. Which strike do you want? Which expiration, etc. It was awful. Then I switched over to God, I can't remember what it was. Doesn't matter. But then I went to Tastyworks for a while, and now I'm with Tradier. And each one has its own pluses and minuses. Each one has something that's useful, right? But you got to figure out what works for you. So if you guys don't mind sharing, raise your hand and tell me some of your experiences with different brokers. Go ahead, Mike.
Am I on?
Yes.
Can you hear me? Okay.
Oh, yeah.
Actually, I found you, Chris. I don't know if I'm allowed to say this. You have something or did have something on Udemy. Udemy, is that?
Oh,
it's a training.
Dude, that's so old. That course is like 1,000,000 years old. Yeah.
But it was like, I'm telling my wife, I said, I don't know what this guy's talking about, but I took the class, but you were doing, I think it was Tasty Trade then. Mm-hmm. And so I did that. And then I forgot about you for a while. I broke up with you, forgot about you for a while. And then came back and found Robinhood, which I went in there because they had a huge, it was 4.5 or something like 4 3/4 interest when I first got in there on your cash. And now it's down to 4. So, and just because all the information, like Dave and these guys have put these scripts out, I think I would probably go to Thinkorswim when I leave Robinhood. The only thing I like about Robinhood, it doesn't list the extrinsic or intrinsic value. You're doing a lot of math, which is not my strong suit. So by the time I figured it out, the market closed. But anyway.
Yeah, that makes sense. No, and that's a great point, right? As it was an easy platform to use for you, but as you've gotten more advanced, it doesn't have all the bells and whistles that you would need. That makes total sense. Does anybody else have a story they want to share? Go ahead, Dave. Oh, Dave, you're muted.
There we go.
There we go.
I actually started off on Fidelity and hated the platform. What I found is it just didn't give me what I wanted. It was very limiting overall. It was not geared towards what I was looking for. I do like Thinkorswim just because I can customize everything on it. I've got, one button. I have all my screens for the day, all my different chart setups to look at things, to, do the analysis. It just made a world of difference. But Fidelity wouldn't do that and I forget what it's even called now. It's not Active Trader, but it's something like that. But their desktop version, their web version, they just were not user friendly. They were geared towards a very different audience. They were geared towards somebody who wanted to buy a stock and sit in it. not somebody who was going to go in and actively trade options and manage their account.
Yeah. And that's what's great about the different accounts is you can find the one that works for you, right? So let me show the next slide here. So we use Tradier. This is our preferred broker, at least right now, with Outlier, right? If you go to this link, trade.tradier.com/outlier, I'm going to talk about Tradier for about 3 minutes. I am not getting paid to do so. This is not an advertisement, but it's what I'm using, so I'm going to talk about it, okay? They do have commission-free stock and ETF and futures trading, and when you open a Tradier account, you'll get 6 months of Tradier Pro for free, and $150 reimbursed by Tradier if you are an Outlier.com subscriber. So that's a pretty sweet deal, right? You get $150 back just for having an Outlier account. Now, of course, go to the website to get all the details. But talking about different brokers here, right? Here's a little comparison, and we can see here if you're trading this many per month, with TradeStation, Interactive Brokers, Thinkorswim, Tasty Trade, and Tradier, it has different amounts that it costs you out of your trading account, right? You're not even going to feel it. You're not even going to see it. But let's say you trade 1,000 contracts on Tasty Trade, you're going to be down $1,000 without even realizing it, right? So this is the kind of stuff that you got to think about. And granted, that's really not all that much. I mean, if you're trading 1,000 contracts and your whole net outlay is $1,000, I know it sounds like a lot, but it's really not. It's really just a pittance in comparison to the fact that you could trade almost instantly across the world. Now, question that I get all the time is, how do brokers make money? So I wanted to make sure that I went through this question here. So I researched this through the magic of ChatGPT, and I said, how does Tradier make money? So it told me several different ways. First, like many brokerages, in fact, let me make this a bit bigger. There we go. Like many brokerages, Tradier routes customer orders to market makers and receives compensation in return. Nothing unusual about that. Payment for order flow. It's a common and legal practice, although controversial. Oh, wait a minute. I forgot. I have a new toy today. I have a new little tool so y'all can see where I'm pointing at. How handy is that, right? Subscription fees. So like I just showed a minute ago, Tradier, hang on, all of us are in the way. Here we go. Tradier offers a plan that has a $10 a month subscription fee. So that's one of the ways that it makes money. Users pay a flat monthly fee to do that. And then they have a partner ecosystem. They have different APIs where people can access their backend. There's margin interest, which we'll talk about margin in a little bit. But for example, Tradier is going to make money on the interest it charges you on your margin balance, just like other brokers do, right? Nothing unusual about that there. So everything that this is doing, and data services as well. A lot of data is free. Now, sometimes, like recently when I moved over to, what is it called? TradingView. This was the first time I had to pay money for data services, like actual extra money for data services, because as you guys know, I'm a snob. So I didn't take the free plan. So I pay extra for the data services. And I was like, oh man, that's not something you normally see, because usually it gets wrapped up into the monthly cost. But Mahesh and I had this conversation actually, because let's be honest, Mahesh is paying for it. It showed how much the actual subscription was and then how much the data fee was. Mahesh was like, oh, wow, that's pretty smart. Maybe we should do that because it makes your pricing look better because you're not rolling it in to everything else. So I wanted to take a moment to talk about how brokers make money, because a lot of people don't understand all that goes with it. Now, I have some great stories on a cash versus a margin account. So there's two types of accounts. Whenever you open an account, it's going to ask you, what kind of account do you think you want today, right? So let's say that Deep Thought. Let me pop open Deep Thought here real quick. I don't know if I can just do Deep Thought in me. Let's see. There's just Deep Thought. There's all of us. I don't know if I can do that. Either way, let's say Deep Thought is opening a brokerage account. They're going to ask him, hey, what kind of account do you want there, Deep Thought? Do you want a cash account or do you want a margin account? And Deep Thought, he's rolling in cash, and he's like, oh, freaking cash account. Duh. Don't you know who I am? But the problem here is that cash accounts suck. I am telling you, and I'll explain why in just a moment. A cash account says you can only trade with your money. And you're probably thinking to yourself, well, yeah, no shit. Of course I can only trade with my money. Am I going to trade with someone else's money? What are you talking about here? A margin account allows you to borrow money to make a trade. Now, of course, on the outset, you're like, ooh, that sounds real risky. And it can be. It can be. But I'll explain the benefits in just a moment. Margin can increase your gains and your losses, and margin accounts are significantly easier to trade with. So let me tell you my story here. When I first got started trading back in 2009, I was trading in a cash account. And in that cash account, I was wheeling and dealing. I was doing my thing. I was buying this and selling that, thinking I was a genius. And then I got caught with the pattern day trader rule, like something that a lot of us have come across at some point. But not only did I get that, I got a free ride violation. And I was like, ooh, that doesn't sound so good. From the SEC. Oh, that made it sound really bad. So in a cash account, you have to wait for the funds to settle. So for example, if you had a $10,000 account and you put on 4 trades that were $2,500, back to back to back to back, and then you put on a 5th trade that's $2,500, even though you've opened and closed the other 4, it's not your money yet. That's not your money yet, because it needs time to clear. The money has to transfer from A to B, and it takes, I think it's 3 days, or it used to be T plus 3. So today plus 3. Okay. Today plus 3. So if you made 5 trades in that period, you have now hit a free ride violation. Bro, this sucks. The difference, though, is with a margin account, you can do exactly that. If you had a $10,000 account, they will actually let you have sometimes 3, sometimes 4, maybe even more in margin to do this. Now, this is different margin than you're thinking of just yet. Let me explain. So if I did those 4 trades in a $10,000 account, and then I did a 5th trade, it still needs that time to transact, right? But in the meantime, the broker is saying, that's fine, go ahead. We'll let you roll that up basically up to $40,000 of open transactions. Because at the time when I remember doing it, it was 4 times. It could be different and probably different for different brokers. So that was a huge win for me when I was like, oh man, this is so much easier to trade with. I don't have to wait for things to settle. I can just wheel and deal. And then I don't have to wait 3 days for everything to turn over like that. Giant, giant win right there. Oh, NeoQuant, thank you. It's T plus 1 to settle today. Yeah, I thought it had changed, but I mean, it just makes it so much easier in a margin account. Now, it also allows you to do a margin trade. A margin trade, if you have $10,000 in your account, most brokers will double that and say, okay, cool. You can trade with $20,000 today. Meaning, I can go out and I can buy $20,000 worth of stock, not options. I can buy $20,000 worth of stock, yet only have $10,000 in my bank. $10,000 in a brokerage account. Do we see where there can be a problem here? Do we see how problematic that can be? When you're going twice as big as what your account can handle, if you don't know what you're doing, you can get hosed really quick, really quick. And they're going to charge you interest on that, right? Some of these brokers have different levels of interest, right? 6%, 9%, 12.5%. That's one of the ways they make their money. So you not only are taking additional risk, but now you're paying additional fees on top of the margin, right? On top of the additional risk you've taken, half of your account is now getting charged, like, let's say on average, 10% interest. I don't know. That may not be something you want to do, but it is a lot easier to trade in a margin account. It's only when you go over the amount that's deposited in there does it make a difference. Does anybody have any questions here? Any of the gentlemen online have any questions? JC?
No, that's all pretty clear, Chris.
Yeah, for people who are just starting, do you recommend margin or start with cash, and then when you get,
I would recommend margin.
That or get,
yeah, that's a great question. I would always recommend margin because then you have a lot less restrictions, right? If you do need to move in, move out, do something one or another, it's not that you have to go open up a whole nother account, have to go through all the jump through all the hoops. It's just, I already have what I need. I don't have to worry about it again. So yeah, it just saves you time. It saves you time, and helps you make money and do all the things that I talk about, right? It's just so much easier. Mikey Mike, yes, sir.
I'm not understanding the payback part of it. There's 10% interest, but is it like any other credit where as long as you put it back in X amount of time, there is no interest on it? Or How does
No,
that?
they charge you per day.
So you're using it, you're getting that hit no matter what.
Right. It's not 10% per day. It's 10% annually. But if you are using their margin, whatever that compounded rate is per day is what they use.
Okay.
Yeah.
That's a little scary. Yeah.
It can be for sure.
Okay.
What's on your mind, Joe?
But you're only using that margin if your cash is depleted or deployed, right?
Correct. Yeah. You don't access the margin at all until you've used up 100% of your cash. Good question. Very cool. Look at this. We're learning something here. Oh, Mikey Mike had one more question.
Okay. To that point then. So you still have all the benefits of having a margin account, but you may not even touch that margin money. Is that okay? That's awesome. Okay. I get it.
That's why I say go with that, because then it's so much easier. You never have to use it, or you can use it if you need to. For sure. All right. Next slide. Types of orders. Now, I know this is a question that a lot of people have, and I can give some really, really good stories. So I'll do this. After this slide, I'll go execute my trades, and then we'll come back. So types of orders. There's market orders, limit orders, and stop orders. Now, there are more than this, but this is the three basic types that I want to cover right now, right? There's all kinds of conditional orders. One cancels the other orders. Very exotic types of orders. You don't need to worry about that. What we need to worry about is market orders, limit orders, and stop orders. So let's talk about a market order. A market order gets a buy or sell immediately. Right now, I need to get in. Right now, I need to get out. Give me whatever it costs. Okay, sounds good, but I got a great story for you in just a moment. Limit orders only will transact at the price that you have set. So for example, if I want to buy a stock at 100, I will not have it come out of my account if it costs $100 and 1 penny more. Okay, cannot come out of my account. It can only be transacted at 100.00 or less. I actually could get filled at 99.95 for sure. Cannot execute at the price higher than what you've set. A stop order is a trigger. A stop order, when it gets hit, will trigger the market order. So for example, let's say your stock is falling and you have a stop at $50, okay? It will then trigger a market order. So it might get filled at $50 exactly. It might get filled at 51. It might get filled at 49 because it is a market order executable only when that trigger is hit. Now, let me share with you a story about market orders because I hate market orders so much. I've been trading with limit orders forever and ever and ever. And there was this one particular options trade that I put on. It's called an iron condor. And it's basically where your stock price is in the middle and it can go up or it can go down or it can go sideways. And you can still be profitable. And it sounds great on the whole, right? The problem here is that I put it on in a stock that didn't have a lot of liquidity, which is one of the reasons why I try so hard to preach how important liquidity is. And so I'm trying to get out of the trade. I'll never forget this. I'm driving home. Don't drive and trade, right? It's worse than drunk driving. I'm driving down the road with my phone, trying to execute the trade. And I'm like, come on. So I'm bumping my limit down, still not getting filled. And I'm just like, oh, F this. I have to get out right now. I can't do anything about it. And I hit the market order. I got filled. I get home. I look at my phone. I'm like, what the frick? What just happened? My trade that should have, hands down, no doubt, been a winner was a losing trade. And I was furious. I was absolutely livid. I was like, how did this happen? So I called up the broker and they're like, you hit a market order. You get filled at the next price. You have no control over what that price is. It can be advantageous to you or it can suck really hard. I happen to get the suck really hard card. And so I did not like that at all. So from that moment forward, that was the one time I ever did a market order, and I will never do one again. You could not get me to do one no matter what. So anytime you're putting on a trade, buying or selling, getting in or getting out, hit it with the limit order. Because when you do, you are in control, right? It may not get filled at what you want, but you're at least going to have the control of being able to get in and get out and seeing where that is going to be. Does that make sense? Cool. Any questions? No. Excellent. Cool. All right. We're gonna pause this real quick. Chris has some work to do real quick. Over on the Discord, I made the plan for today. Let's go through that real quick, right quick. And I'm not going to be able to spend a lot of time on this, but I do need to execute some trades. Here's the plan. Apple will close if it closes under the 50 EMA at 210.38. Apple is currently where? It's at 210.38 right now. Let's give it just a moment to figure out which way it's going to go. Next, Etsy. A new order block was built, and I will absolutely be closing it today, right now. Now, order blocks take a couple days to develop, and this one did. So that is an exit signal to me. So I'm going to go close Etsy, the full position. I'll give all the details later on the Discord. Okay, I'm out of Etsy at 227. So I no longer own any Etsy stock. Let's go to the next one here. GM, if it closes below 50.09, that is an exit point for me. It is at 50.15 right now. 50.09 is the prior day's low after I've already rolled it. It's at 50.17 right now, so I don't need to do anything on GM. SMCI. So this one, a lot of people freaked out about this morning. SMCI. I don't know why. Right? Just following the plan. I knew where I'm going to get out if I need to get out, which would be at the half ATR 42.97. Let's call it 43. It's not even close to there. It's 43.84 right now. So I don't need to worry about SMCI. SMCI stays on. So the only one that we do need to make one more look at is Apple. This is below its 50 EMA right now. I do need to close Apple. So closing this one here. Close full. See if I can get filled. Okay, so I'm filled. I'm out of Apple at 12.75. So, of course, I didn't get a chance to go through all the details with you guys, but I am out of Apple and I am out of Etsy. I'm holding GM. I am holding I didn't talk about Palantir. We need to look at Palantir. So Palantir is right above yesterday's low. And just like in GM, if I've rolled it, then I want to be very aggressive as to where I'm going to get out. This one here, it's like 20 cents over yesterday's low. So I need to hold it just like I would with GM. They're in the exact same situation. Okay, so to recap, I'm out of Etsy and I'm out of Apple. So that's part of the game, right? We can't win everything, but I'm definitely making plenty of money this week. No stress there. So let's get back to this. Now, I don't expect you guys to know what I just did. I don't expect for you guys to be able to follow along everything right here. So don't stress on that. But let's go to the next one. Order control and stop losses. What I just did in my brokerage account on the other screen was I used limit orders, right? And so on those limit orders, I said, I need to get filled at this price or better. So Apple, I got filled to close at 12.75, meaning that you cannot fill my price. I will not let you fill this price unless you give me $1,275 or more when I go close it. Does that make sense? Cool. Next, market orders are the fastest, but your price can be all over the place. We have no control, right? That is all the way in the control of the market gods at that point. Stop losses can be triggered by temporary spikes. Let's go through that. Let's go through a great example today. So I know in our Discord, a lot of people were freaking out about SMCI. I know nobody here did that, right? Nobody here online freaked out about that, right, Paul? Nobody freaked out about that. But a market order, a stop order can get hit and then it wicks back the other direction. That totally happens all the time. This is one of the reasons why I don't do any sort of market orders. I don't do any sort of stop orders. I want to be in control of my trades. I want you to be in control of your trades. And when you put an order into the market, it feels good, right? It feels really good to say, I'm going to get out if it hits this point. But it doesn't feel very good when you look at a candle like this, right? Where it went right back through that and right back up. That doesn't feel good at all. So that's why I say, I want to always be in control of my money. I want you to always be in control of your money. So I suggest never using orders that can get filled without you actually filling them, like a stop loss order. And then, of course, set your stops wisely. Volatile moves can hit them before the price recovers, right? If you're too tight, if you say, I'm only going to give it 5 cents to find out if it works, right? I think a lot of people happen with that on SMCI, right? They saw any sort of down move and they're like, oh my God, I got to get out, right? Without having a plan, more emotional than anything. I don't know if they even had a stop that they set in place on that trade. For me, I have no reason to get out of it, right? Two very different outcomes for the exact same candle. So let's go to the next one, bid and ask. Now, this is really important to understand. The bid is the highest price somebody will pay. Let's go take a look at this real quick. So this is the, in fact, let's go to Apple. So there's bid and there's ask. Now this is on options. It's the same on stock, right? There's a bid and ask. So right here on Apple, the bid is 210.58. The ask is 210.61 on the stock. And let's go to the 200 strike right here, just for fun. The bid here is 14.55. The ask is 14.70. So this is the very most that anyone would have to pay for it. This is the very least that anybody would sell it for. Okay. Now it's the same here. You're going to have to pay somewhere in between the bid and the ask. Now, sometimes you pay more, right? Let's say if this is 20 cents wide, sometimes you're going to have to pay this entire amount. And sometimes you can find somewhere in the middle. And then when it's really liquid, like the stock here, it's 3 cents wide. 3 cents wide between the bid and the ask. On the option, it's not as liquid. Even though it has thousands and thousands of contracts, it's not as liquid. So this one here is 27.65, 27.45. So this is 20 cents difference. Liquid meaning I can execute this right away, right? Let's take an example of what liquidity means, right? If I own a jet or a boat, or something that is very difficult to find a buyer for, the bid and ask spread is huge. If I own a $10 million jet and I need to get out of my jet because I, for some reason, am no longer wanting to fly around all over the country like a baller in my own jet, I'm like, who can I sell this to? Salty Brad. Salty Brad needs a jet. And Salty Brad is like, yeah, I don't have 10 million. Sorry, Chris. I'll give you 10,000. Right? That's a very wide bid-ask spread. And things like that can happen because that is not a liquid asset, right? If I need to get out of that jet, it's going to be very, very difficult. The same is true in options. The same is true in stocks. If this is a stock that nobody wants to own, the bid and ask is going to be huge, right? Because you're asking somebody else to take on the risk that you no longer want. Why would they want to take that on? They're going to make sure that they get paid extra for it. Mikey Mike, do you have a question? Oh, hang on, you're on mute.
Sorry. I actually am over an Apple and it will not let me sell my Apple right now. It keeps saying I can sell 0. I was going right along. Boom, boom.
Okay, tell me why it won't let. What does it say to you?
It says, well, if I hit it right here, 1285, sell to close, limit order, 3 available. Click on it. It says your limit order to sell failed. You can only sell 0, but I've got 3.
Oh, that means you don't own any of it. Check and make sure you have no position on, because it sounds like you're about to sell the option when you don't want to.
Oh shit! Well, something just got happy. Well, I just saw the 3 go away from the stock, so.
Okay, so let me ask you this. If you go into your portfolio, do you own any Apple right now?
Yeah, let's look. Here's my notification. Hang on a minute. Your order to close 3 contracts. View 246.
Yeah, Randy in the chat sounds like he's about to sell short, which is exactly what it sounded like to me too.
I don't get it. It said I'm not sure what I'm looking at here. I see the account recent. It just said 5 minutes ago, 39 or 3 contracts at 13 on Apple. Type, limit, sell, position, effect, close, good for day, status filled, quantity
So
3.
your status is filled. So you no longer own those contracts. If you try to sell them again, you're now short those contracts.
Okay.
That's why I'm asking if in your portfolio you have anything.
Now that's the only order it's showing.
That's the
Yeah,
only
but-
order that was filled.
Yeah, the other one's from yesterday. With
Okay.
the next one, the next one in line is from yesterday, which is SMCI. And yeah, I don't even know where to go for the
Well, that's okay. That's what I want to make sure was that the only order that was executed was the one to close and not another one to open.
Yeah, I was doing close for sure, but it kept. I mean, that's one thing about Robin. Sometimes it doesn't even seem like it sends me the notifications. I got to go look over in notification. It doesn't get like a hey, you made it. So
yeah, it sounds. I think David. Thank you, David, for this chat. It says it likely won't let you sell naked calls and just error out, which is what it sounds like. So that's a good thing. That's a safety buffer from Robinhood. Very cool.
Okay.
Very, very cool. Awesome. You know what, Mikey Mike, thank you for sharing that with us. That is a great thing that happened to you. I know it sounds weird to say that, but a great experience that we can learn from, right? Dude, I
got all kinds of great experiences. I've been recording this. Anyway.
Okay, let's talk about why that spread matters, right? Between the bid and the ask, right? Between the buy and the close right here. If you were to open the trade, but if you were to sell the trade versus buy the trade. Now, why it matters. A tight spread means more efficient trades, more liquidity. It's easy to get in, easy to get out. It's like if I'm in the jet market and I can find a buyer at 10 million who is willing to take me selling it at 10 million, that's an efficient liquid market, right? But a wide spread means more slippage. Wide spread means I'm going to have to move. My $10 million jet might be worth 9, might be worth 8, might be worth 5, might be worth 4 before I finally find a buyer, which sucks, right? So we want to make sure that spread is as narrow as possible. Now, this can make a huge difference. This can make a huge difference in your profitability. If you are crossing the bid and ask, let's go to something that's not super liquid. Let's go to, I don't know, throw a stock out there. Let's go. First person who says a stock, I'll go to it. Anybody?
I'm trying to think of what that's not liquid.
Rocket Lab.
Rocket Lab.
RKLB.
Which is not Roblox. Every time I think of RKLB, I think of Roblox. Rocket Lab, perfect. So looking at these, right, you're going to see the bid and ask spread. This is decently liquid right here. Let's find one that's not so liquid. So this one, not so much. I'm looking here in the open interest. When you look at open interest is who wants to transact with you today. Who has trades right now ready to roll? That's what you're looking for. Let's see if we can find some maybe further out.
I think DTM was not tradable today because of liquidity.
What were we
right.
looking at?
Right.
AR?
Yes.
Try to look up AR.
So DTM is a perfect example, right? If we go to the DTM September options and we look at the 85 strike here, there is no way you could get me to buy this. No way you could get me to sell this. Because if I bought it for $21.50, let's do the math here. If I bought it for $21.50, so $21.50, and then I could only sell it back at $17.50, that's a $4 spread. And that means that is an 18% spread. So in order to transact this, to go from being a buyer to being a seller, it would cost me 18% right off the top. That is no bueno. No está bien. Chris is not taking that kind of trade. No, sir. So that is one of the reasons why liquidity is so important. Not only that, but literally nobody wants to transact with you. You're going to be the one dude holding contracts of this, right? Do you really think that you can stand on the train tracks while everything's going past and be like, hang on, guys, I got all these contracts to sell. Don't you want to buy something from me? No, they're going to be like, what are you doing? Get out of here. You're going to get run over. Because even if you wanted to get out, you're going to give up 18% to do that for the pleasure of buying this and being the only person buying it. Whereas we go to Apple, these are 10 cents wide, sometimes 5 cents wide, 15 cents wide. That's what you're looking for. You want to be able to get in, you want to be able to get out, right? That's exactly what you're looking for. So let's go back to the PowerPoint here. Watch for low volume. It can delay your fills or worsen your pricing. And think of wide spreads like bad exchange rates, right? Like when Deep Thought's running around between South Africa and London, and he's like, I need a Guinness when he shows up down in Cape Town. And they're like, okay, well, the Guinness is going to be 84,000, South African, I don't know, pesos. What is the South African currency? I don't know. Dollars? Rand? Okay, it's going to be 84,000 South African Rand. And then you come back and you get those changed into British pounds, and you get, I don't know, 1.2 pence, 1.2 pence for your 84,000 South African Rand. That's a pretty bad exchange rate, right? So that's what we're looking for here is you can buy it, you can sell it, and this is what it costs in transaction costs, basically, to make that spread. All right, next, paper trading versus real trading. This is a big deal. I always tell people, start with paper trading. And in fact, Steve, one of our Discord members, gave me a great idea because, one of the things that he gave me a great idea for was putting this little cursor thing, right? So every time I click and every time that I'm moving my mouse around, you guys can actually see what I'm doing. Great idea. Second great idea he had. So I have a business account on my other screen, and I actually manage multiple accounts for my family. And I don't show that work for everybody. That's none of your business. I keep it over there separate on purpose. He said, why not do the paper trading inside of Tradier? So I want you guys to all find a paper trading account that you're comfortable with so that while we're doing these Outlier University lessons, you can go into those paper trading accounts and get crazy, right? So here, I could buy the mess out of some Apple, right? I could go in and in this paper trading account, I could buy one of all these strikes. Oh, no more than 4 legs allowed. Sweet. And I'm going to hit a market order. Let me do this so you guys can see. I'm going to hit a market order because I'm dumb. And yeah, just buy it all. I don't care. Right.
And it's sprayed as well. Yeah.
Now I own all of this. What a brilliant move, right? And it's like, oh no, what am I doing here? Look at my portfolio. It's full of apples, but I hate them. I don't even like apples. So then you can come over here and you can close the trades, right? Let me make sure I'm doing it correctly. Where's the close button? Hang on. Let's go back to the options grid here. There. I've completely lost them. I need to opposite that. Why can't I do this? I can't even select these. I don't know. I've clearly done something wrong here. Point being, I'm not worried because it doesn't cost me any actual dollars. And so because of that, this is why it's really good to have a paper trading account. So I would encourage you guys, all of you guys, to go get a paper trading account. That way you know what you are doing. I've broken the paper book. I don't know why I can't execute the trade, but it doesn't matter because it's paper trading. I don't care. So paper trading allows us to practice without real money. Now, I have a great story about this. One of the times, I've blown up my account twice. One of the times I blew up my account, I was explaining to my wife what happened. Always a hard conversation. Now, I'll never forget this conversation because we're driving down we're driving up the Dallas North Tollway. And she's driving, which is a very rare occurrence. I don't know why she was, but I'll never forget this moment. She's driving, and I'm like, hey, listen, let me tell you something. She's like, what? And she looks over at me, what? I'm like, well, I kind of blew out the trading account. And then she's like, what did you just say? Can't you learn to trade with fake money? Oh, yeah. That's a great idea. That's why she's valedictorian of her high school. I'm just saying. Way smarter than me. Yes, of course. And you can do the same. And I would really suggest you do the same. So I spent the next 6 months focused effort making trading as much as I could feel real in a paper trading account. And I suggest that is exactly how you should start doing it. Get in a paper trading account and then make it feel as real as you possibly can. It won't feel that way, but try to make it feel as real as you possibly can, right? It allows you to practice without real money. And it builds confidence and tests your strategy, right? So you'll know where you got to get in and you'll know where you got to get out. You'll know the buttons to push. You'll know exactly what you're doing. And do that until you have actually proven that you can be successful in a paper trading account. Because I'm telling you, once you start trading with emotion, or trading with real money, it gets emotionally charged fast. It gets emotionally charged really fast. And you don't need to be there until you've figured out how to be profitable in that paper trading account. So use those paper trades to learn, but expect real emotions to hit you really differently when it comes to real money. Do you guys have any paper trade? Oh, JC, yes, sir.
Yeah.
Are you muted?
I'm with Fidelity right now, and even Fidelity Pro to me is Chinese. And I know that some of you gentlemen have probably some experience with Fidelity, and some of you have even moved out of Fidelity for some of the reasons that you've stated. As you know, I'm new, and now I'm using actually Outlier. We kind of briefly talked on email, using Outliers to see if there's sell signals, buy signals, and look at all the crappy stuff that I bought in the last 3 months as I was going through YouTube and following my little text group of friends without knowing anything. And I don't want that anymore. So if it's going sideways or down, I'm cashing out. Now, my question is, what you're demonstrating with your option exchange, is that Trader?
That's Tradier, yes. Now,
Tradier,
also
I'm
to
sorry,
keep in
Tradier?
mind, most people are just going to be doing stock, right? And when you're doing stock, let me get out of the way here. It's just going to be something down here. You're going to say, give me a market order right now, right? That's all I want.
Right.
Or you might say, give me a debit, which would be a limit, and set that price that you want to get filled at. Yes.
Okay. So two questions. Would it behoove me? I don't like Fidelity. It's got too many things that I can't. That's why I have a public account for the options I was trading, because it's much easier to go with public, although I screwed that up with 3 wrong pushes, and I went 2,200 in the red. Bang. That was hi, how are you doing? Let me show you how to use public. I screwed the pooch up big time my first time out. I don't have a preference, so I'm just starting. And I don't mind going to cash, all in Fidelity right now, with the exception of maybe a couple of things, and then opening up another brokerage. I have one on Robinhood, and that to me was Chinese too. So what do you suggest to someone that is in this group? You will be trading or at least demonstrating things with Tradier. I am going to cash. I'm going to have cash available to open up a trader account, a brokerage, another brokerage account. Do you recommend that Tradier is something fairly simple? We're going to be going through it, so I'll have a chance to actually see more and more done there. Yes.
So Tradier is decently simple. I've seen very complex ones like Thinkorswim, and I've seen 2 simple ones like Robinhood. I feel like Tradier hits the right medium. It certainly works really well for options, but it may be, there may be other ones out there that are simpler to go with. But for me and my style of trading, that's what I like, and it's got just enough complexity without being overly complex.
All right. Plus, we're going to be using it here. You're going to be using it here to demonstrate and teach. So that's I think that's a huge benefit if we're operating on the same system that you're operating on when you're teaching.
Right. Exactly. Yeah.
Cool.
That'll do it.
Good. Thank you.
Yes, sir, Dave.
Hey, I just want to throw something in real quick on Thinkorswim. Is you have the paper trading, which is great. That's live market conditions. You're seeing everything you'd see in the live account, but they also have on demand. And so you click that, you can go back to any date, any time, I don't know how long, but quite a ways back, and trade on a completely different circumstances. But more importantly, you can do it in the market's off time. So you can jump in on a Saturday morning and go trade on March 5th, 2021. And, play with the techniques, play with your, strategies, everything else, and really get a good feel for it. So that's another benefit, I think, for Thinkorswim. I'm not selling it one way or the other, but that to me is an interesting feature, is being able to go back and look at the historical data and, being able to trade live off of that.
Gotcha. No, brilliant. I love that idea. In fact, that would be really, really useful, like when you're studying, to go back and say, you know, earlier on today, what would have happened? 3 weeks ago, what would have happened? I think that's super smart. And I just want to point out something, right? My trading plan called for me, and I think this is a brilliant example. My trading plan called for me to close Apple if it were below the 50-day moving average, right? Now, in the last handful of minutes, it went up since then. Am I going to be butthurt about it? No, just part of it, right? I got out, I followed my plan, and if I had looked 5 minutes later, I would have had a completely different outcome, right? And sometimes that happens. There's nothing we can do, right, to influence this. I can't change. I cannot wish and hope and pray that this candle will come back. All I can do is follow my plan. And so sometimes the plan works great, and sometimes the market takes a little bit of money from you. So I don't want you to stress. And for those of you watching, I see a lot of people freaking out about it in the chat. It happens.
I'm 100% sure, Chris, it was my trade that did it.
Thanks a lot, Dave.
I closed that out, and the very next second, that candle shot up.
Appreciate you, Dave. Yes, sir, JC.
Yeah, you know, and I understand why it would be, and I understand what you're saying, but would it make sense that the less you know, the less emotionally charged you are, and the easier to follow a plan would be, because there's no other instincts that would pull you in one direction or another. If you say, look, here's the plan. You come in here. If this happens, you bail out. If this happens, you go up, and there's this thing called a roll, which we're going to teach you, and then you roll, and then it becomes almost risk-free, blah, blah, blah. So you get the sequence. Well, what's so hard about that? Well, yeah, it went up later. Big deal. I mean, does it make sense that the less you know, knowing less would help you?
Dude, that makes total sense, right? And this was hard for me because I went down the rabbit hole of selling options for years and years and years, thinking that I was so smart. And then it turns out that if I had not done that, I would be decades ahead of where I am now. Decades. And so I had to unlearn those processes, right? So you're exactly right. If you don't have any processes to unlearn, learning it the right way can be significantly easier. Completely agree with you on that.
Easy. All right.
Yeah.
Cool.
Mikey Mike was first. Then we'll go to Joe and Brad.
That's what he was just talking about, not having any bad habits to break. And, you know, I love the idea of the options. I love the leverage. I love all that. And had the plan, had everything, confident all day. Things are, we're going to do this. It's the platform where I went in and disintegrated because I was like, I don't know what in the hell just happened. You're talking about something else. I'm missing some of the class. And then I have to come over to you and say, hey, Chris, this just happened. So that, you know, that thing with that's and I've watched videos on Robinhood, so I don't know if it's just the learning curve on that. But up until the actual transaction is when things just fell apart for me. It just felt like, man, I am in here bouncing around inside this platform like a pinball. But anyway,
no, I get it. And I mean, you know, you're somewhat distracted, right? It's different than if you're focused. You don't have, you know, a Zoom call that you're on or anything, and you can just focus on making the execution. I get that for sure. I mean, and that's why I say if you've got an emotionally charged situation, right? Maybe you've got a death in the family, maybe you've got some stress at home. It may not be the time to trade because you could potentially make mistakes without even realizing it. Joe, what's on your mind?
So two things that we're doing to prevent a catastrophe right in this program, right? First thing is we're buying long calls. We know what our max loss is. And the second thing is we're position sizing. When we position size, we know what we're willing to lose in order to have that open-ended gain, right?
Yeah, precisely. That's so critically important is because whenever you buy a stock, you theoretically could hold that down to zero. There have been plenty of people who've blown out their accounts because they have held it all the way down to zero. With an option, a long options trade, you have a maximum amount you can possibly lose. And you cannot lose more than that. Even if the world burns down, you cannot lose more than that amount. Impossible. So yeah, to your point, exactly. It reduces risk by doing that. Brad, what's on your mind?
Going back to the paper trading, it almost seems easier to disconnect your emotions to the paper trade. So once you get into that habit of another YouTuber's thing, but bulletproofing your mindset, where you're just going through the steps and you're just putting on the trade and you're just taking the trade off and then you're marking it down in your journal. That has helped me on the actual live side of it, where I don't get emotional. I don't, well, I still get emotional, but it's gone down from, revenge trading and stuff like that when I first started out, or thinking I was the genius because I made, a couple $100 on a trade, and then all of a sudden I lose 4 more. So when you're using the paper side, use that to actually bulletproof your mindset and keep your emotions in check and just go through your trades.
Yeah, and that goes back to what I talk about all the time. There's 4 types of trades: good trades, bad trades, winning trades, losing trades, right? A bad trade is one where you didn't follow your plan. Win or lose. A bad trade, you didn't follow your plan. A good trade is when you followed your plan, irregardless of the outcome. You win or lose, you still followed your plan. Apple, you could consider a good trade for me, even though I lost money on it, even though it went up after my stop out point. It's still a good trade because I followed my plan. I'm not going to stress about it. That is part of the game. There is so much zen that has to go into trading, and a lot of that is just focusing on following your plan. Remove the emotions. And I know it's hard, but removing the emotions. So when to go live after you've been paper trading? You have a defined system, right? I talk about this all the time. Coming up with your own plan, right? Figure out your plan. Use the time you're paper trading to figure out your plan, right? You're profitable on paper, right? And not just once, not just like, oh shit, I want to trade, I'm profitable, I need to go trade real money, right? Thinking about all the Lambos you're going to buy. Don't do that, right? Get consistency with this. When you can see that you can look back at your trades and see why you got in, why you got out, and then you can point to the points of why you got in making sense and why you got out making sense, right? You've journaled your trades like we were just talking about a moment ago, and you see the consistency, and don't rush into real trading. Prove your process first. Now, that's so hard to do. That is so hard to do. Oh man, but I want to be making money now. I get that. But you're going to be losing money even faster if you don't take the time to learn the processes. So what helps with that is making a trade log. Now, I detail so much in my trades: where I get in, where I get out, why I got in, why I got out, all the different numbers. I want to see the market breadth, the sector breadth. I look at all kinds of stuff because this has helped me go back and find patterns. Not like patterns on a chart, but patterns in the data. Oh, you know what? When market breadth is this high and then it starts contracting, oh, wait a minute, that's actually a really good exit signal. So then I can say, okay, if this is a good exit signal in the past, look at a couple other examples. Oh, you know what? This plays out. Now it becomes a rule. That's how you go from paper trading with no plan to successfully trading with a plan, is by actually documenting your trade so you can keep up with all the data, and then you can start making references and finding those patterns. That's what you've got to do. So here's some things to add to your trading log: your entry price, exit price, position size, the day, the reason for entering and exiting. A detailed log is how you learn from your trades. Exactly. And this is why in our Discord, I also like to put, let me go to the Discord real quick, show you an example. I like to put why I got out of the trade, right? My heat map target was hit. That's why I got out. I have no other reason to get out because it hit one of my exit signals. And because it hit one of my exit signals, I got out. And with Apple, even though it's not going to work out for me, if I had held it longer, it would have stayed on. That's fine. I'm still going to put on there, it looked like it was going to close under the 50 EMA. And had it closed under the 50 EMA, I wouldn't have any regrets. Even though I closed over the 50 EMA, I don't have any regrets because I followed my plan. I followed my plan. And let's go to the next slide here. If you need a trade log, there's a great one out on Amazon written by Dave, our fellow member in the Outlier University. So pick up a copy of Dave's trade log. Dave, show that again real quick. I'll make you bigger. There we go.
Yep. Trying.
That is not going to work.
There we go. This is my author's copy.
No, very cool.
One thing I want to point out real quick, Chris, and I've mentioned this in the chat with
Congrats,
everybody,
man.
and Apple is the perfect example of this. It met the rules to exit, period. As second I exit a trade, I take it off my chart. I get rid of it. I don't want to see that trade for the next 10, 15 minutes. Go get a cup of coffee, journal it, come back. So that way you're not in the mindset of second guessing yourself. You know, it shot up. Boy, if I had only held another minute, you know, I would have been, you know, much better off. I would have come out break even. It could just as easily have gone straight down. Absolutely. It met the requirements. We enacted the plan, get out. I take it off the screen and I don't think about it. And it's hard adherence to those rules. Yeah.
Well said. I think that's a brilliant idea, and that's what I do too, right? I don't want to look at that guy again. Screw that guy. I'm out of here. I never want to see you again. And that goes for like a winning trade, like AT&T, right? That was one that I traded not all that long ago. I made some money on it. And if we look back, you know, that's where I got in. That's where I got out. Big deal. Right? It's going to do what it's going to do. But it didn't do that with me. Right? I got my reasons to get in. I got my reasons to get out. And you don't have to look back. Right? Don't Monday morning quarterback these trades. Next, executing a trade. Identify your setup. Confirm your setup is ready. Choose the right order type. Remember, always a limit order. Place the trade and record it in your journal. Right? Go through these steps. Should be simple enough, but these are the steps you need to go through. And repeatable execution turns trading from gambling into a system. Because how many times have we heard somebody, I know my brother-in-law is really guilty of this. Every time he wins a trade, which he has no plan for, he just literally buys something and he's like, well, I hope it works. And then if it does, he will brag about it until no end. And if it doesn't work, it's like it never happened. I don't know what you're talking about. I didn't make any trades this week, right? That is gambling. We don't do that. We have a system. Why we got in, why we got out. And we know that sometimes we'll make money, sometimes we'll lose money. Sometimes we'll make tons of money, sometimes we'll only make a little bit, and sometimes we'll break even. But we will never allow a big loss to happen. Never. So of course, remember, if it's not set up, sit in cash and don't F up. This is one of my phrases that I want everyone burned on their body with a brand that they will never forget. Sit in cash and don't F up. It sounds so easy, but I know it's exceptionally difficult. I know it's so stinking hard to sit in cash and not F up. But the way that you do that is just sitting and waiting for your setup to happen. In the meantime, don't do anything. And then lastly, after you've got your journal, right? After you've done all this, after you've made sure that you understand where you're getting in and where you're getting out, right? Look at the execution of the trade, right? Did your trade get filled quickly or slowly, right? Did you have to move up your trade? Did you have to move down the trade? Did you get filled right away? What happened? How much slippage was there? Did you get a better price than you expected, right? If you did a market order, how much worse of a price did you get? Could you have improved your entries? Could you have improved your exits? These are the things to evaluate. Maybe not after every single trade, but after every 10, after every month, something like that. Take a look back and say, oh, look at this. Okay, I see some good things here. I see some bad things here. I'm going to make sure next month is better than last month. And you continue to do that, and you have exponential gains at that point. And then lastly, of course, every trade teaches us something. Every trade will teach us something. You just have to be willing to listen. Listen to the market. Listen to what the market's telling you. Don't try and tell the market what it needs to do. So that's going to wrap for all of my slides today. Gentlemen here online, do you have any questions? And for those of you who are watching, we're going to do 10 to 15 minutes of question answers, and please try and keep it on topic. I don't want to answer any questions about any random stocks. I don't want to talk about the Apple trade again. Let's try and keep it on topic. Okay, Mikey Mike, go.
Everybody talks about, okay, and just kind of blow right through the, hopefully this will be more on the position sizing. And I've talked to Deep Dot and Dave, and you guys are probably going to roll your eyes now because I'm still not grasping if I have X amount that I want to risk, you know, and then I want to do one trade or 10 trades. How do you calibrate for, I only want 5% of my entire chunk of money, but I'm going to do 10 trades today. I'm going to do 10 options. Oh, I want the same 5%, but I'm going to do 3. How do you do the math on that? Or are these charts so simple and I'm overthinking them? Maybe you've.
Let's do the math together. Let's do the math together, because there's possible that you won't be able to do 10. And then there's possible that you could do 25, right? So for example, this is the position sizing spreadsheet that I like to share with everybody. If you don't have a copy of it, go grab it from the VIP Investors Toolkit. I know you guys have a copy of it. But come over here, fill in your details. This is automatic. Fill in your account balance, fill in your risk per trade. And then generally I go the 80 delta, but you can put whatever you want. And then let's say over here, SMCI, Apple, Datadog, and then I'll add a couple like Etsy that I traded. Then there was, who else did I trade? SMCI, Palantir, GM, Palantir, GM, right? So putting all these on, and here's the funny part too, Mike, is that the ATR values are honestly the big driver of these position sizes. The ATR value, this is the current volatility of those stocks, is the big driver of this. There will be times where ATR on these is going to be way higher. There will be times where ATR is going to be way smaller. So this gives you an idea of how big on stock that you would be taking, right? And then you come over here and let's just use round numbers here, like $5, $6, $7, $8, $9, and $10. If you were putting on the option trades at that size, right, you could have all of these on, and let's hide us for a minute, and that would result in 46% of your account, okay? But if you were to do this with stock, that would be 362 times your account. So impossible. Okay.
Now, where is that showing that percentage that you just 362 and the 40
down here? There's just a Google sum right there. And in fact, you can do like the average, the min, max, count.
Okay.
Yeah. And then, like I say, these position sizes make sense today based on today's ATR. If we come back a month from now, it'll be totally different. It'll be totally different, right? This ATR may be 10, right? And so watch this. Our option position size at 8 goes to 3. If this goes from 6 to 5, our option position size will go from 4 to 6. Right?
And so those are contracts. Is that right?
Yeah, contracts.
Okay.
That will change every time you come back, because ATR is always changing. So yeah, I mean, if you're used to trading 8 contracts of SMCI today, in a month from now, that may be too big, or in a month from now, it may be way too small. So that's
so how do you position size? Okay, I traded 4 of these contracts yesterday, and now I got to the next day, and I'm like, wow, this looks good. I'm going to do. That's what I say. How do you keep that in your overall percentage that you want to, or you just don't take it?
So here's where you could go in and just upgrade it, right? Maybe after every trade you go through and you're like, okay, now I'm at 105,000. Maybe I'm at 135,000, right? Or we need to back it down. We were at 135 yesterday. Today it needs to be back at 120. Okay, something like that. And that's always going to change and help you update to the right position size. Because like right now it's at 10 for 120 or 8 for 100. So it's going to change based on the ATR, and it's going to change based on your account balance, and it's going to change on your risk, right? If you want to put 25% in any one, you can. The math is there. Should you? Probably not, but you can.
Okay. Yeah, that was just some of the, and I'm also using the one that Deep Thought has on the charts, but I was trying to, and I came back to this, the option size. I was looking for the word contract on the chart. I was being very literal, you know. So it's like,
oh, sure, yeah.
So, anyway, and everybody seemed to get it, and I was like, man, everybody's, okay, get your position size, and we're in the trading platform trading now, and I'm like, okay, what's this position size?
So you guys watching me is equivalent to being an observer while somebody's doing surgery, and then trying to do the surgery yourself. Right. That in a way, that's very similar to what we're doing here. I'm going fast. I know what I'm doing. I know what I'm looking for. And I'm trying to talk you through it as I'm going. And of course, I can't go through everything. But that's what Outlier University is for.
Awesome.
All right, gentlemen. Who else has a question? How can I help you out? Ozzy Ian, I saw you talking, but you're muted.
Sorry, yeah, Just saying that's what homework's for.
You're saying that's what?
Homework.
I'm sorry, I'm having
Homework.
terrible buffering issues today, so I'll have to fix that. I'll just mute myself again.
Oh, I'm sorry about that. Deep thought. Do your amazingness. And
No, I was just saying Ozzy Ian was saying that's what homework is for.
yes, exactly. That is what homework is for. Precisely. Yeah. Any other questions from you gentlemen here? Dave.
I was just going to throw in real quick on that ATR point. It was kind of mentioned there, but Deep Thought and I have both created on-chart templates for Thinkorswim and TradingView that does it all automatically. They're pretty darn close to your numbers, about 95%, just based on how the calculations run. But again, another great tool to at a quick glance to see how many shares, how many contracts based on your risk or percentage. All of those things. So
very cool. I remember Deep Thought showing that to me. So is this available in our Discord right now for people to go download?
Yes, I have the TradingView Pine scripts.
Yep, and I have mine in the Thinkorswim script, and it also calculates on screen when you purchase. It calculates the half ATR, the 1 and the 2 ATR, so your numbers are right there to do your charting quickly.
Dude. That's sick. I'm so proud of you guys.
We were talking back and forth, so we tried to make them easy for everybody.
And I love smart people. Y'all are great.
Deep Thought put in the most recent one. If you go in there, unless that's the only one left in there now, is 3.4 on TradingView.
Yeah, that's the latest one, 3.4.
Sweet. You guys are awesome. Okay. Anybody else before we go to questions from the chat? No. All right, we'll go to questions from the chat. Thank you guys so much for that. David, the position sizing sheet is inside of our Discord in the VIP Investors Toolkit. I'll show you where that is at real quick. Over here, VIP Investors Toolkit. Scroll up a bit. Hang on. I put some scripts in there because I have no idea how to share it like Deep Thought and this genius. Position sizing spreadsheet, and it's going to be specifically exactly this one. I can do the mess out of some Excel, but when it comes to like coding stuff, I don't even know how to export, right? Like, shut up, I'm doing my best over here. Soccer mom had to move up my portfolio balance this week to do the position sizing, and that was a great feeling. Outstanding. Mike A asks, how do you find a good pool of stocks to pull from? Well, I mean, it's obviously going to be Outlier, right? Obviously going to be Outlier. And that's the screener. Yeah, the screener has saved so much time. In fact, before we had the screener, we just had the watch list. And on the watch list, it was your favorites, the buy signals, and the sell signals. And so what I used to do was I would pop this open, and then I would filter for just the uptrends. And then I would copy it out, and then I'd go through each one and look like, okay, how many, or what's my previous day close? What's my average volume? Like all the stuff that you'd want to have to figure out. Now the screener does all that for you. It's so simple. So just going through here, I'll share my screener settings real quick, but I want a positive signal return for the outlier returns, greater than 1 million shares average daily volume, current buy signal, and then all the market caps. And as you guys know, I am a snob, so $20 or greater is all I look for, right? I'm not going to buy anything if it's under $19.99. Are you kidding? Ugh, peasant food. No, thank you. 90 or less on the fear and greed heat map. And I want to see that fear and greed heat map moving up. And I want to see the uptrend indicator moving, that meaning that the 10, 20, 50 trend template is already pointing up. That's what we're looking for. Cody says, Chris, when you sit in cash during a market downturn, do you do anything with that cash to make a positive return? For example, put it in whatever while it's still being liquid. No, I don't personally. Now, there are brokers out there that allow you to sit in cash and make some money. For me, it was more sit in cash, right? Sit in cash and don't do anything with it was essentially all I had. But you can do that. Cody, here's the best part about this. You have unlimited opportunities in the market. You can do anything. And in fact, I think that's a really brilliant thing to do. So if you have that availability and you understand that there may be some market risk associated with getting in and getting out, go for it, dude. Go for it. I think that's awesome. Let's see. David says the position sizing chart is so helpful. Thanks for making it available to us. I didn't do it. I mean, Deep Thought and Dave are the brilliant ones who came up with that. You guys are awesome. Dave, hey, that Dave. If anyone needs a journal, it's a Profitable Trader Strategy Journal. Nice plug there, Dave. What do the green and red boxes mean in the sizing sheet? Let's go look at that real quick. The green and red boxes. I assume these right here. So this is the correlation to SPY. So Apple correlation to SPY is 79%. SMCI's correlation is negative 26. So the higher this number is, the more of an exact correlation it is. The lower it is, it goes from -1 to +1. The lower that correlation is, the greater it is a negative correlation, meaning if the SPY goes up, that stock goes down. So Apple, as you would expect, has a really high correlation, so does Datadog. But something like Etsy or Palantir, they don't have very much correlation to it. Next is the relative strength. Relative strength is measurements of your average gain to average loss divided by average gain to average loss of the market. So if your relative strength is greater than 1, that means that this is outperforming the market. If it's less than 1, that means it's underperforming the market. And then relative strength delta. This was a measurement that I used to use. I don't really use it anymore. But what this shows is how much the relative strength has changed in the last week. So for example, SMCI has grown 19 percentage points in relative strength in the last week. And if you look over here, this is what that 19 percentage points looks like if this relative strength were a chart. Right? I'm not good with computer code, but I'm really good on spreadsheets. So that is what those numbers are for. And I mean, I actually used to use these as part of my trading plan. I don't necessarily so much anymore, but if it's useful to you, by all means, go for it. Why do some comments that Chris shows on the screen not appear on the chat? That's probably because we're running this simultaneously on the Outlier channel and the Christopher Yule channel, and some of the comments are on either one, and that's why. Let's see. Ermac says, what is the best trading strategy would be for a small account, so about $2,000? The wheel strategy or buy options that Chris recommends with a small amount and exit as Chris advises us to do? Well, you're going to have to figure that out for yourself, right? I am not a huge believer in the wheel strategy whatsoever. The wheel strategy basically says sell puts until you get assign the shares, and then sell covered calls against those shares. Yeah, ain't nobody got time for that. That is a dumb strategy to me. I would want to make my money and get out of the way versus having to lose money, then be assigned calls that are all, or assigned shares that are already losing money, and then selling calls against those shares that are already losing money. It's just a stupid strategy, right? I don't know why anybody thought it was brilliant, but people do. It's stupid. I mean, I'm not biased or anything, whatever. Steve, hey, thanks for those great recommendations, by the way, Steve. Who is selling the contracts you're buying? It's a great question. Doesn't matter to me, right? It's fungible, right? It's like going to the bank and saying, hey, who had this dollar bill last? I don't know. Dave. And then he went to the vending machine and he bought himself a Coke, and then he, took that Coke and recycled it. And then, I don't know. You can go down the rabbit hole with that. Point is, doesn't matter. Let's see. Alan says, if you set stop losses, how do you calculate the half ATR amount when there is intrinsic and extrinsic value included? Okay. So when I set a stop loss, my stop loss is half of an ATR from the entry point on the chart. So if we go over here and we look, wrong button, and we look at AT&T, right? For me, looking at this, AT&T's ATR value was 81 cents on this date. So I went half of 81 cents down. So let's call it 40 cents from my entry point. That would be my stop out point. That would be my stop loss point. Now, I got in and I got out. I didn't have to worry about that. But that has nothing to do with intrinsic or extrinsic. That's showing you how much volatility there is on the stock. And then you plot that onto the chart. It makes it pretty simple to know where you're going to get in and where you're going to get out. Amy says, do you ever short ever? Is Outlier going to give short signal or buy to open puts or buy to open calls only? Great question. So right now, Outlier is basically a long only platform. However, if you're clever, which you probably are, just take the Outlier 9, flip it on its head. There's your short signals, right? Now, what's the Outlier 9? What's the Outlier 9? It's my patent pending way of analyzing a stock. And if somebody even dares to claim that their way of analyzing a stock has 9 digits, I will send them a cease and desist order. Screw those guys. But the point is that 40% of your move is due to the stock market itself, the market itself. 30% is due to the sector, and the last 30% is due to the stock. Okay, so the market and the sector make up 70% of your moves, and the last 30% are the stock itself. So you want to make sure the market's trending higher with a buy signal with bullish breadth. But if you're going short, trending lower, sell signal, bearish breadth. Same with the sector, right? And same with the stock. Just taking it, flipping on its head, that could be a fantastic opportunity. And that is something you'd want to paper trade. Make sure that it is working for you, right? Ange says, with regards to the market breadth, is the weighting of the various stocks in the index or sector taken into account? Let's go look at market breadth. So the way that we measure market breadth is how many stocks have buy signals versus how many stocks have sell signals. So if we look at the energy sector, you can see right here, 82% of the stocks in the energy sector had a buy signal at this point. And then we get to the bottom, and 0% of the sector had buy signals. That's the first zero I've seen before, by the way. So I wouldn't be buying anything if not anything has a buy signal in that sector, right? But then a couple of weeks go by, the market cycle resets, starts at 18 and runs all the way up to 76. And then the cycle repeats over and over and over. And this is so cool if you look at the breadth to see just how much this moves up and how much this moves down. And I personally like to use full stocks. So we cover 2,600 stocks, which is more than the S&P 500. And we're adding more all the time. But this is my go-to. And I like to use the 10-period EMA because it's less noise. And so right now, we don't quite have a bearish crossover yet. It's pretty close, but not quite yet. We continue on. Senior Wahoo, yeah. If all red, then yeah, you could do short calls. I would do long puts instead. But you do you. Stop loss is for the stock, not the options price. Okay, let's make some clarifications here. When I say a stop loss on the chart, I'm getting out. The options price is going to be what the options price is going to be, and I'm not going to fight it. Did Ozzy Ian just put on a Guinness hat? I didn't realize we were such best friends, Ozzy Ian. I just got to put that out there. So yeah, the options price is going to be what the options price is going to be. I just know I'm going to get out of the stock when it reaches that point. Let's see. Any other questions here? Spyro says, thoughts on adding stock trades in addition to options trades during the outlier class may be beneficial to those who may not be ready for options yet still applying the same rules. I mean, any options trade I take, you could absolutely take the stock trade without the options, right? The options give you a leveraged investment to go with it, but you don't have to take that, right? You don't have to take that. So my objective here is to give you the concepts, and you take that and you do as you wish.
Hey, Chris, do you want to show what your account balance would be if you were trading stock versus options? You have the sheet already open.
Yeah, it would be significantly less is what it would be.
Yeah.
I mean, like, for example, like portfolio size, I could put on 2 trades, right? That's it. 2 trades, and I've totally maxed out my account. Versus if I'm doing on the options, now this is example prices in here. That'd only be 6% of my account. 6% versus 100% of my account. So by doing so, I have the ability to do all kinds of maneuvers that I wouldn't be able to do with stock. Yeah, I mean, and this week has been like, and you guys have all seen it. The amount of gains that we made in the last week for somebody who didn't have my account would be life-changing money. Literally life-changing money that I made in the span of 4 days. That's how trading goes. You go feast and you go famine. But in the meantime, don't give up what you had in the feast, right? Sit in cash and don't F up is not a joke. Yeah, Brandon says, I've been taking the stock trades while learning from Chris, for sure. If you're buying stock, you can't get the speakers for free. Yeah, you can't roll anything. You can't do all the fancy, cool rolling stuff that we do. That's a fantastic point. So listen, I hope that this was useful. I really appreciate the fact that so many of you are watching live and that these 8 gentlemen got to come and hang out with us today. I want to say thank you to everybody watching live, and thank you to you gentlemen right now.
You did forget one thing, Chris.
What did I forget, Deep Thought?
Follow price.
That's right. Profits follow price. Exactly. Well said. Outstanding work, Deep Thought. Outstanding work. All right. You all be sure you click one of these 2 videos here, if you're ready to save time, make money, and start winning with less risk. And I'll see you tomorrow morning. We'll talk soon.